All right, everyone, this is Vishal from Equity Guru, and welcome to another chart attack video. We are going to talk about the price action in the stock markets. I know it's been, some people would say it's been boring, some people would say it's been volatile, some people are just, you know, wanting to know where the heck these markets are going to go. A lot of confusion out there. The day we're recording, it's on March the 2nd here, and you can see that all three of the major U.S. markets here are up. They have broken out on their intraday levels here as well. And you can see even CNBC talking about stocks trying to shake off higher interest rates. So that's sort of what this whole thing has been about. We will take a look at the S&P, the Nasdaq, the Dow, and the Russell 2000. But we should start off with the charts of the bond yield, more specifically that 2-year. And oh man, okay, so it is actually breaking out above the highs here, which we created on, what is that, November 4th, 2022, with that large wick. So if you've been following my work on Market Moment, if you're a part of Equity Guru's newsletter, if you aren't, be sure to sign up by going to equity.guru. But we've been talking about this chart on the 2-year yield and also the 10-year, talking about maybe yields were topping back last year as the market began to price in, the Fed pivot, right? A few months later, it doesn't look like that's going to be the case anymore with interest rates rising. Not interest rates, inflation coming in higher than expected. Obviously, the CPI data that's going to come out this month for the month of February is going to be very highly anticipated, given that the January CPI number for inflation data came out higher than expected, putting this idea that the central banks are going to continue raising interest rates, and the market right now is looking at a terminal rate of about 5.25% from the Federal Reserve, so two more sort of 25 basis point hikes. And you can see here that the yields, the 2-year, which tends to follow the Fed rates, there is rising, and talked about this major breakout which occurred, and we are now actually breaking out above the highs as I just mentioned. So keep an eye on this chart, especially as we approach that 5.25, 5.1% level here on the 2-year, because that is sort of what the market is expecting to be the terminal rate. But if we see yields continue to climb higher, it will put pressure on the stock markets as, markets basically begin to price in more rate hikes from the Federal Reserve. Me personally, I've also been watching that US dollar chart too, because, as yields rise, I'm expecting it to also go up, and basically the dollar to follow as yields rise. So if it's not doing that, right, if we're seeing this case where the dollar is rising and yields are dropping, I would sort of be looking at this as a risk-off sort of trade. But that's not happening right now, right? I won't go too into detail about that, but generally, a lot of people looking at the dollar rise here as a hawkish hawkish Federal Reserve move here. So the dollar is looking to break out above this 105 sort of zone here, 105.35, and this is the Dixie chart, the DXY. Keep an eye out on this, because if that does get a breakout, then I think there might be a bit more pressure on the equity markets as well. So let's take a look at all the equity markets, the S&P 500, the Nasdaq, the Dow, and we'll take a quick look at the Russell 2000 as well. But I've drawn out this trend line that's been connecting these, I guess you could say, lower highs here on the S&P 500, going back to January or December 2021. And you can see it's been respected. We've had more than 3 touches, which is sort of the number I look for. And we had a breakout of this trend line back in January of this year, January 23rd, 2023. A lot of technical traders were watching this, saying, okay, that's a bullish breakout now. And as long as price remains above this trend line, as a retest, you will see eventual highs and taking out these previous recent highs, and the uptrend continues. So it's funny I say that, because today's candle, you can see we have a green hammer here. We're seeing a lot of wicks here, indicating that there's some buying pressure here. And it is happening very, very close to our trend line there. So perhaps some bulls are jumping in and placing their stop losses below this trend line over here. But I think this is definitely worth watching here. Me personally, I'd like to see it close back above this 40-70 zone just to get back above my moving average. That's where I would feel safe. But I think, just this green candle here is significant. It is a hammer candle. And if we close like this, I think we can see some more momentum a bit higher here on the S&P 500. Nasdaq is what I've been watching quite a lot just because of this double bottom sort of W pattern which triggered. And believe it or not, we are also testing or retesting, I guess you could say, that breakout. And in recent days, like in the more than 5 past trading days here, you can see that we've been just hovering above this support zone and buyers are stepping in. Again, another hammer candle here, green hammer candle, which is indicative of buyers stepping in and pushing prices higher there. And I think I would watch for a breakout above this, let's call it the 12,200 zone here for more momentum a bit higher. But this is a chart that, I've talked about a lot just because even on the weekly chart, you can see we have that same double bottom like pattern with a retest here. And if you're looking at this on the longer time frame, then this is quite bullish. You can even draw your trend line there and seeing that we do have a breakout and a retest. So all these markets, the current fall, if you look at these broader, longer term time frame, the current falls are just pullbacks in a new uptrend, which I know might sound a bit crazy, but that's what we are seeing. And I know that there are some people talking about, if interest rates have to head higher because of the failure of this Fed pivot, I guess, and market pricing in higher interest rates, that might not lead to this soft landing, right, where the Fed will be able to raise rates in a way to tame inflation and avoid a recession. I think, if that is going to be priced in, that would be something that could be detrimental to the equity markets. But again, watch that 10-year and the 2-year bond yield charts for more indication of that. The Dow Jones is a market that hasn't really been doing too much. It's just been basically held within this range since November. And that range was in danger of breaking down, right? There was actually a body candle close that happened on Tuesday, February 28th, on the last day of the month for February. Had some people a bit worried because, when you get a body candle close below previous bodies, that tends to be a bearish sign. But, once again, this is why I keep saying these support areas are zones, right? And I like to say that because it's not just one price target. You do have to sort of factor in the wicks there as well. And, if you're looking for these body closes, you want to see a very, very strong red candle close, which will take out that support. So we haven't really seen that. And it does look like this support might hold here on the Dow Jones, which will lead to, perhaps this range being tested or the upper parts of this range being tested before we get some sort of breakout. So as I say this, S&P 500 testing support, Nasdaq testing support, the Dow Jones testing support, everything here is looking normal, right? In terms of a technical approach to the markets where we're just in a pullback and now going to see bids before we continue the new longer term uptrend. And believe it or not, surprise, surprise, you see the exact same thing here on the small cap, the Russell 2000. And I think this is worth paying attention to because we had a really big sell-off on February 21st. And for 1, 2, 3, 4, 5, 6, 7 full trading days, we failed to break below the support. And you can see from the long wicks that there are buyers stepping in here. So when you see something like this where, and this is the daily chart, right? So you're seeing many days of failure to break down. It's usually an indicator that there is a battle, of course, going on between the bulls and the bears, but also perhaps a sign that the bulls, in this case, might be winning just because the bears just don't have that pressure, that momentum to get that breakdown. So this could be a very good sign. I follow the Russell 2000 a lot because it tends to lead the S&P, the Nasdaq, and the Dow Jones. So you can see a nice range developing here. And if we do get a close above this 1917 zone here on the Russell 2000, I think that would be a nice breakout pattern to play that continuation before we take out 2000 and continue higher. So that's going to be it for me. I hope I've sort of provided some clarity of what's going on in the markets. And I say that just because I know a lot of retail traders have been giving me a call and have been messaging me saying, hey, where the heck are markets going? Why are they so slow? Why is nothing happening? And I just, like to tell people from a technical analysis approach, look at these longer term time frames. Look at the daily chart, look at the weekly chart, and just look at the patterns which we have and the breakouts we have. And just know that, markets don't move up, don't move down in a straight line. When you have these breakouts, there tends to be this pullback before you see this continuation. And as long as your technical levels are holding, your trade is still on. So as I said, in this case, all of these markets are holding their support levels. And as long as they hold that support, we still expect more upside. Now, saying that, if these support levels do break, and some people are saying that this bounce is just going to be a dead cat bounce before we sell off, if that support does break, then of course we will look at the markets in a different way and see these major technical zones be taken out, which would obviously be very, very bearish. But of course, I would also want to see, maybe some sort of evidence in the bond yield charts supporting the breakdowns. But perhaps it might not come from that. Maybe it's going to come from some other news, maybe geopolitically or something, right? But as we are speaking, the markets are still holding on. And I think sometimes it's good to just be patient and just wait for, your signals to trigger before going long. So as I mentioned, we have these ranges. I just talked about certain levels that I'd like to see breaking out on a few markets. And if I get that, I will go long for a trade on the equity markets here as well. But let me know in the comments below what you guys think about the markets and where they are heading. Are you bullish or are you bearish? I'd really like to see your comments below. Be sure to follow us and give this video a thumbs up, and I'll catch you guys all in the next chart attack.